Welcome back, Jenko people. Right, boy, Yadi here again doing another video. Just gonna make this a quick educational video on what it is I'm looking at and the opportunity it presents with information in front of me. Right, I'm gonna jump right into it. So I'm currently looking at a market that was breaking down, right, making lower lows, lower highs, and we have had a shift in structure. Right, a break once to the top side, then a break twice. Right now, these structure breaks are indicative of a impulse. They represent impulses in the market as the market moves really and truly in a structural manner in three directions, really: higher highs, higher lows, higher highs. So up, down, slash lower lows, lower highs, and lower lows, or it moves sideways, right? Which is range bound. And if you look at the market, it either is going up, it ranges and then goes down, or it goes down, ranges, and then goes up, right? Those are the three directions in which market moves. That being said, we are currently undergoing one of those transitions where we go from a downtrend into an uptrend. And as you can see, right? So from putting in lower lows, lower highs, and then lower low, right? We've broken this once, pulled back down, and then broken this twice. So we're currently within this range of price right here, low to high, right? That's where the opportunity itself is coming from right now. So structure broke at this high, and I'll put a line under here, the ultimate low from which that break came from, marking out the impulse. I'll put a gray box around that impulse, right? Now, all or the best trade ideas founded in the market are founded in market structure, and this market structure is saying higher high, higher low, higher high, right? With this being the impulse we're in, and to describe an impulse, it's a move through structure, often leaving behind missing price in the form of these inefficient candles right here that needs to be filled in, and an inefficient candle in the form of a demand candle. In this case, granted, it's a uptrend. If it was a downtrend, it would be a supply candle like this one, right? So this being a demand candle, the sell into the buy, I'll highlight that candle right here on the 4 hour, make it a darker color. This candle shows where institutions are more likely to get in at. They are more likely to accumulate more positions at these prices. Granted, you don't buy highs, you buy lows, and then you sell highs, right? So with that idea in mind, we're closer to the low right now than we are to the high. Hence more buying pressure would be present in the market, right? If I bring this chart down into a 15-minute, what you'll find here is that upon reaching into the demand zone left behind, being the dark area, right? Filling in price, sweeping liquidity, whatever we got to do, what you'll see price do is set up equal lows in the form of liquidity, right? This tells you that people are getting in, they're buying early, buying here, price breaks highs here, but they're not ready to go up yet, right? So this is the transfer of liquidity from weak hands into strong hands as it's put. But what it's showing you is that retail money, me and you money, right? You and I money, we buy here, they'll sweep our stop losses, keep sweeping our stop losses until they're eventually ready to bring price higher and deliver into the highs, right? Hence, a downtrend, all you're really seeing here is a downtrend turning into an uptrend, right? Once it starts breaking, starts going higher, ultimately targeting this high right here. So the opportunity being taken now is founded really in a couple of things. It can be taken at the zone itself. Clean this up. It can be taken at the zone itself, either waiting for confirmation or simply taking it at the zone once we've gotten there, as that is cheap enough price, right? So entry right now is about right here. stop loss underneath the impulse low. So if structure is delivering to buy side, right, with this being the impulse from high to low, stop losses underneath here are technically safe, because if price were to break this low, structure would change and you could look for sells. In this case, as long as it doesn't break the low, it's going to target the high, right? So that's our trade idea right now. Entries here, targeting the highs, stop loss underneath the low. And for this specific trade, it's risking the standard 2% per trade, with the management rules really just allowing price to run to the high. We'll break even as soon as price gets away from the entry a bit, but keeping the stop loss underneath the structural low right here is what keeps this position safe risk wise and allows us to be in a safe trade, hopefully delivering into the high. Now, if it doesn't deliver into the high, that's where risk management comes in, as that's the most crucial part of trading. You only risk what you're comfortable losing. And in this case, 2% is what I'm comfortable losing per trade. And as such, 2% is what I'm risking on this position. Now, that 2% runs to the high. We get out with 2.25, pretty much exactly about 4%, 1 to 2, really and truly, right? So the idea now is to allow this to play out. I'll try updating this as it goes along, as time passes. Solid opportunity started in the week. Just wanted to make this video real quick, just explaining what the idea is founded in and how you could possibly go about finding these entries moving forward, right? So that's what we're working with right now. Just gonna see what happens with price. Just wanted to make this short, quick video. Appreciate y'all time. Have a wonderful night.